Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
And good, Billy Ray, feeling good, Lewis. We are going to change direction here today, folks. Instead of just talking about patterns, I want to go into the history books because I've been doing this for a long time. Since 1959, I did my first trade. I want to just talk to you about some of the things that I've seen over the years, starting in 1960. I believe it was Brunswick, the bowling company, and this was the hottest thing going. The chart looks just like Tesla does right here, folks, parabolic. Everybody was going to have a bowling alley in their basement. And, of course, it went to $3 a share, and finally it was taken over. I forget at what price, but that's neither here nor there. But I'm going to explain to you the ones that I was involved in that have the same characteristics of what we're looking at. The 1972, I was in the offices of Conti Commodity there in Westwood. And we had a big thing happen during that time. President Nixon took us off the gold standard, and that brought in the buying of Russian grains, and things were just really, really crazy. That day, there was a bean report, and the bean report was very, very bearish. And Ivan Hour was on the squawk box that they came in from Chicago every morning to tell us what was going on with the cash markets and things. And that's the same time that I had been working with Rich Anderson. He was just a little young kid at that time, I think about 19. And Ivan Hour came on and says, well, there's limit down mostly across the back options. He said there's not going to be much trading today. About 20 minutes later, he came on. He said, well, there's a little bit stuff is coming off limit, he said. So there might be some trading, and in about 10 minutes to go, he said, this market's firming up pretty good. And then right before the opening, he said, gee, he was using four-letter words that I can't use here. We're going to open limit up. We're going to open limit up. And they did. They opened limit up, and they went limit 3 or 4 days, as I recall. And it went really crazy. That brought in the grains when beans went from, I think, $2.60 to $13. And that was a huge move, if you can imagine that. But we've had some other big moves through that area. The other one that I remember very vividly was in 1976. I happened to be involved in this because I was long soybeans and soybean oil. And Cook Grain, which was run by Willard Sparks, was very, very bearish, and he was taking the other sides of these positions that I was putting on, these bullish bean oil spreads and bullish soybean spreads and long beans. And he said, you're really wrong here. He said, I'll let you get out at even. He kept telling me that, and I had telling my broker that because he didn't know who I was from Adam. But the market, went up, and that day in June, I believe, of 1976, the report came out, and the soybeans report was just so bullish that the comment was on the Reuters that day was the only soybeans we're probably going to be able to find is in the Smithsonian Institute. And when I saw that, I started telling my broker to write orders, and I helped him write orders to get out of everything, and I did. The market was supposed to be up the limit 4 or 5 days in a row. It barely opened higher and then went down limit 3 days in a row and was in a bear market for a year and a half. And Cook Grain was correct, but they had gone bankrupt because they, basically, misguided the market. And this is what's happening with Tesla now, folks. Somebody's on the wrong side of this trade, and my guess is they panicked and they started adding. I don't know what's causing this, but there's going to be a reason for it. Parabolic moves like this with all the gaps, they always end badly. This is an automobile company, and I realized this morning when they found in the glove compartment, the cure for cancer, that everybody buys the car, gets a cure for cancer, so that'll be a big help to sales. But that's the kind of stuff that you're going to be seeing. We hit $908 earlier. I don't know where we are now, so we're going to be able to see, what's going to happen to that. The other one that I remember very vividly was the big bull market in gold and silver that ended on January the 20th of 1980. And when gold hit $865 an ounce and silver hit $54 an ounce, there was the same type of a panic going on. And silver had been up the limit, though, 22 days or something like that, or up 22 days. I don't remember what it was. It was some ridiculous amount. But frankly, folks, I was doing a lot of business there with the coin dealers, and the real cash silver market never really traded above 35 cents an ounce, $35 an ounce. The reason why we knew that was because the price of the bags, the $1,000 face value of coins, that's what was really trading the market. Futures markets were higher, but there was no trading up there. It was just limit. The shorts were trapped, and that's pretty much as I remember it. And of course, when it went down the same way as it went up. The other big one. I don't have junk silver. I have coins. I still have coins. Yes, I still have some of those 1964 and under face value coins. I've kept them. Most of the silver that I have now, I converted back when silver was really, really cheap, back around $10 or $12. I converted it into investment grade silver dollars. One of my favorite was New Orleans Mint, and I bought rolls of that for almost nothing, and those rolls now are worth a lot. Each coin is worth a couple $100, and there's 40 of them in a thing, but they're easier to store. The problem with that silver was that it was really hard to store. When I was living in Westlake Village, and I had 4 bags, and I sold those bags in 1980. But what I did was I bought a big dining room table down in Mexico with hollowed out legs, and I had made the legs so that the bags would fit inside those legs, and I had that big 4-poster dinner table there, and each of the legs had about 20 grand in silver in it, but nobody knew it. And anyway, when I sold that stuff, I got out of that, in 1980. So that's one of the things I remember, very vividly about that. That was easy times back in those days. But these things come and go, and the biggest one of them all is. The biggest one of them all to me was the dot-com bubble in 2000. That was a once-in-a-generation thing. What we're seeing now, we're seeing bits and pieces of these things from people, but this is really, what we're watching here. The Dow is lagging really badly here compared to the rest of the market. It's mainly Tesla. Google's down on the day. You can imagine if Google starts to take off, what will happen? But this thing with the Tesla, I believe they've got somebody trapped. I don't think it's Jim Chanos, because he's a really, really brilliant guy, and I just don't think it's him. But we'll find out down the road. But markets that go straight up like this, you see all the gaps. Once the last buyer's in, look out, because look at that little last chart. That you see, we had a $60 swing in about 5 minutes. That shows you how nervous the market is. So those are some of the things you want to keep involved on. Those of you that took the buy signal that I gave on Tesla at 300, you could exit your positions now. And if you still believe that, I have one more share of the Brooklyn Bridge waiting for you right there at the corner of Broad and Wall in Wall Street. Now, we'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, I want to spend a little bit more time about the 2000 dot-com bubble. That was a once in a generation because you had these companies that, they didn't even have sales, and yet they would double overnight with the potential there might be a buyer out there. Gosh, I remember some of them were just so ridiculous. And, of course, they went up, and most of those companies have gone, bye-bye. And the problem was that the market topped in January. The Dow Jones topped in January of 2000. The Nasdaq did not top until March the 24th, that Friday. I remember because we were in San Francisco for one of those money show things, and I was in that money show, and everybody was walking around carrying their equity runs, showing them how much money they were making. And I remember very vividly getting up on the table because everybody was just talking. I couldn't get any word in, and when you got somebody who likes to talk like me and they get interrupted, it was bothering me. So I got up on the table and I started stomping my feet and warning them that there was a train coming down the track, with dynamite loaded on it, and it was going to hurt them really bad. And I showed them all the charts of the 3 drive patterns and the history of vertical moves and 1.618 expansion. And of course, it went on deaf ears. One lady called me about a week later, and I told the folks, if the prices go below the low of the 17th of March, the Friday before, that was a sign that I was going to be right. And of course, it happened on Monday the next day, and the lady called me and told me she liked it very much and thanked me very much. I said, did you get out? She said, no. She said, I'm going to be buying on the way down. But I thought you did a good job of speaking. So there you go. When it lands on deaf ears, who knows what that means. But anyway, that was one of the biggest ones of all time, and there's a lot of stories behind it that I'd gone into before. Some of them I can remember. Some of them I don't want to repeat over and over again. But the Dow has been lagging quite a bit compared with the Nasdaq, believe it or not, folks, took out the highs of last week. It didn't take out the contract high as of yet, but it took out last week's high. Interesting this morning, the 61% retracement of the move down in the S&P was at 3289.50, and that so far has been the high, 3289.50. Mr. Z, I think, just posted that into the room. So next thing we're going to do is we're going to take a look at the German DAX like we usually do, and you can see they've had a big run up in the market. One other thing, hold on one second, I want to get up here. All righty. If you'll just one other thing that I wanted to to bring to your attention here, folks, is the news here. Look what the stocks are doing in the United States, given the fact that the second largest economy in the world has basically shut down, China. No airline flights going in, hardly any going out. Basically the people are, quarantined for at least 2 weeks, maybe 3 or 4 months. We don't know. And Hong Kong, the second largest economy in Asia, has shut down also. And yet the market keeps going higher and higher. That's not unusual. We've seen this many, many times before. I remember one of my most vivid ones was I was sitting here, and it was in the mid-'90s, and I was short soybeans, and the report came out, and it was very bearish beans, and beans dropped about 28 cents, not quite limit down, and then they started to rally back. When they got to be, up about, unchanged on the day, I said, uh-oh, something's wrong here. So I just exited my position, and they went a little bit higher. I left the house. I went to the movies. I was so upset with myself for not covering it down there because I was so bearish. And so I went to the movies and came back to see that they had gone up to be almost limit up and then dropped to be limit down and were locked limit down. And so my idea was right, but my timing was absolutely wrong. That's what happened to Willard Sparks when he was chairman of Cook Grain. He had the right idea, but, the timing was off a little bit. So we'll see here. Ruby saying that, Larry, is the month of February the most bearish for commodities? I do not know the answer to that, Ruby. I just look at the charts. I don't look at the seasonals too often. Mr. Z probably knows that, better than I do, but that's what I'm keeping an eye on today anyway. We'll see what happens with some of these things, but we'll do one thing at a time. Okay, what else? We wanted to show the FTSE here because we've had a really huge move today in the British pound, folks, up and down. We were 100 pips up, 100 pips down, and it's up again. So it's been really crazy over there, too. So there must be something happening with Boris the Magnificent or Brexit, whatever it is, but that's had a big move. It stopped right at that support at 29.50, then rallied back really strongly. So we have really wild swings in some of these currencies, as we are seeing in the market. I believe these markets they're doing what they're supposed to be doing. There's nobody in there controlling these things. I don't believe them. No one has that kind of power. And if they did control it, why did they control it exactly to fib numbers and ABCD patterns and stuff? Why did they do that? Well, I don't know. I just think it's natural law. That's all I'm looking at. All I know is we hear this from our family in Asia. It's just very, very troubling over there. People are scared in China. They're scared in Hong Kong. Well, they're up to 20,000 cases now, 400 and some people, and that's what we know. That's what we're being told. Who knows what it really is? I think I've told this story before. I was in Beijing at one of the meetings there when I was giving talks about free markets and commodities and stuff and stock markets, and I was talking to the reporter, and the reporter knew someone in the thing there, and they were waiting for a GDP number to come out, and he told me, he said the GDP number is going to be 7.3, and I said, how do you know that? He says everybody knows that. He said they tell us long before they even do before they do the numbers. I can tell you what it's going to be the next month. And believe me, that's what they do. And I mean, these numbers mean nothing. So we'll see. Who knows what's going apart. There's another one. The British economy is supposed to be falling apart with Brexit. No, not happening. Judge is ruling. So follow the charts, and they've certainly been going up. Last night was very, very amazing to me because of the fact that I had sold the S&P at that fib number at 32.65, and it went all the way down to 32.25. And so I put my stop in to protect profit and stuff. And when I woke up, I saw that I had gotten stopped out, and the market had moved 20 handles higher. And I said, oh, my goodness, I wonder what's going on here. And then I checked and found out that it was Tesla was causing the main thing, with even Google being down. You can imagine if the market turns, if Google turns up, you could see something, really, really dramatic. So those are just a few of the things that I remember. If you want to get a handle on some of the things that happened many, many years ago, read the book, Reminiscences of a Stock Operator by Edwin Lefevre. It's basically the story of Jesse Livermore, and he tells of the stories about how these people would get trapped into certain positions, and they would have to cover their shorts. That was the old what was the old what was that? What was that saying? I can't remember it. He that sells what isn't his'n must buy it back or go to prison. Because if you sold shares short and you couldn't cover, you went to prison. That's how it was back in the old days, in the old 1900s. So a lot different now. All they do now is put a white collar on it, and they give you 3 months of a tennis championship prison, and then you will say that he that sells what isn't his'n must buy it back or go to prison. I don't know who said that, but it's in Livermore's book. I remember that I've read that book 50 times over the years. In fact, I just bought a copy to review to bring some ideas here to the show. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's open and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart here of the gold. As you can see here, this is a 4-hour chart going back to middle of January, and you'll notice we have an ABCD pattern. We just hit that price just a few minutes ago at 1561. That's a 61% retracement of the whole move down there from 1535 up to that high that we made here at 1598 just the other day. So that should be a very, very important spot to take a look look at it. I would watch it. Those of you that look at the bond market, by the way, the risk on that would be about $4 is all you'd want to be looking at. Now, those of you that are lifeguard aficionados here at TFNN, you'll take a look here at the bonds here. We've come down about a handle and a half, well, just about 2 handles actually, almost exactly, at that 162.06, 162.08 is an ABCD pattern in a bull market. That's going back over the last 5 days. That means that should hold. Whether that means there's going to be a reflight to quality or not in bonds, I don't know. All I know is that's a completed pattern. Anything below 161.10 in this would certainly be a failed pattern if you're watching that for sure. Okay, let's move on here to one other thing we wanted to talk about. The Nasdaq actually, Dudette, the Nasdaq does not gap up 100. She knows this. It's up 150 points, that's for sure. But it's not a gap up. It started going up last night, and it really exploded at around 5 o'clock this morning. I think that's when the Tesla really started to move. You could see the coordination between the two, and that's when the panic began to hit, and it pulled everything up with us. But the Dow has lagging badly, and so we'll see. We'll be able to see what's going to happen. Anyway, those are just a few of the things that we're watching here this morning. Mr. Z has just posted some things from Daniel Drew, was supposedly the one that gives that credit to that quote. But remember, back in those days, folks, we had no newspaper. See, we didn't have really good prices until 1875. 10 years after the Civil War, did we really start to get good prices? That's pretty much, that's what we're keeping an eye on. We'll see what's going to happen with it, but that's what we're looking at here this morning. What is truly amazing to me is the fact that the news coming out of China is so bad, and yet the market keeps rallying. And boy, those are the ones that try your soul, because usually when you look at something technical, you can understand. We can understand why Tesla's going up. They either got somebody that's really heavily short the stock that is totally panicked. In other words, instead of covering like he should have, he's sold more, and now he's more and more. I don't believe that I don't think the Fed is adding liquidity into a market like this. I would be really surprised if they did, but nothing surprised me. We'll see whether that happens. Has anybody heard whether Jim Chanos is short? I don't know. We'll be able to see. The Chinese has certainly, the Chinese definitely primed the pump there, but the darn thing is supposedly a lot less. We'll see. He probably moved out at around $300 a share. That would be my guess. He moved out and went into puts. Well, his puts are not going to be worth now, so we'll be able to see. Okay, all right. Let's see, hogs. We're going to have Simon Lee on hopefully tomorrow for a 10-minute segment to talk to us about what the farmers are doing, with these things that are happening in China, because exports have basically stopped. And so he'll give us an idea of what they're doing and how they're handling it. But, we have the grains up just slightly today. I don't know if that's because everybody's looking for something to buy. So we'll be able to see. Tesla's 839 now with a high of 907. Well, if you look at that 4-minute chart, the low of that 4-minute chart was 830. So it's retraced a great deal of that. Is that correct? The last price on Tesla is 839. I don't know. Well, what goes up must come down, but the problem is, it's not easy to enter the market. So we'll see. Thank you for the quotes. We'll keep an eye on that. Ruby, all I'm waiting for on the hogs is if we get down here, I think I don't know if we're limit down again, but we should be. I sold 907.5. Oh, it didn't get there. Shut the front door. Anyway, you're going to hear all kinds of stuff like that. That the Hubei province of where Wuhan is a very beautiful place. I've been to that city a half a dozen times, speaking at the university there. And believe me, folks, I can tell you with a great deal of confidence that the numbers you're hearing are underestimated. I just know how things work there, and so you just have to be. There was a video out there that I saw where there were people. A lady just walked into the hospital and saw 7 bodies, and she just walked in to do something, and it was just really bad. And they just built a 1,000-bed hospital. I think they built it in 8 days, Sarah said, and that's there's some real serious things going on, but who knows? Anyway, that's what we're keeping an eye on here this morning, and we'll see, what happens from these levels. But what goes up must come down is what Mr. Newton said, but he never told us when. Remember, Isaac Newton, almost lost everything in the South Sea Island bubble. In fact, he lost almost all of his money, and he was supposed to be one of the smartest people in the world, but that's neither here nor there. Let's take a look at the Bitcoin, folks. Bitcoin is acting pretty good. I've got the chart here for it. I wanted to bring it to your attention. Where is it? Shut the front door. I guess I've lost it. Yeah, it's holding up extremely well, and it's right up against that 1.618 expansion again. Let's bring up here I want to bring this up here to show you where we are here this morning, because we're up around 28 something. I forget where we are here in the Dow Jones. Let's just get this puppy up here. Okay. Wow, we went up. Wow, just in the last few minutes, folks, we went from 92.70 to 92.40 in the Nasdaq. So it's really rocking and rolling. And whether it's probably related to Tesla or not, I don't know. But we'll do one thing at a time as we look at these things and see where they go. Let me put this chart up here at the bottom in the market here on last Friday. You'll see here, this is where we stopped. We had that beautiful 3-drive pattern right on the close. And then, of course, the market opened higher. And we've gone, I think we're up around 28,000 something right now, I believe. So it's had a heck of a rally. Nothing like what we've had in the thing. Silver's turned green. Silver, I tell you, folks, the platinum looks good. We've been very bullish on platinum. I think we covered that in the letter. Quite a bit, because it was really a really nice pattern in the platinum for the key support, and it's certainly held that, and we've had a really nice move off of it from the 960 area. We got up into 980, 990, so that's been a really good move. We have a very, very interesting gentleman from Egypt who happens to be one of our listeners and one of our subscribers. He deals in platinum, and he was telling us that he thought it was pretty bullish there. Look, if you look at that platinum chart, folks, we're down 10 days, sitting right at a 61% retracement of the low from Christmas Eve, and that held, and that's it. That's all these patterns and ratios are, folks. They are ways to look at risk parameters. That's all they are. Nothing more, nothing less. That's all they really are. So you've got to remember that. Very, very important. We'll have to be able to see here.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I posted the chart of the hogs, and you can see here we've went down and went way below the 1.618 expansion. We made a lower low yesterday and then bounced back up a little bit. What I would be waiting for now, Ruby, is to let the market trade naturally here for a few days and rally up a little bit and try to buy the first retracement back. You know, that would be the one. That way you can protect yourself here with risk. Of course, if you bought it now, your risk would be below 6,100. That's down 24 bucks a pound since just October the 14th. So you've got to be really, really careful, and that's what these patterns are for, is to control the risk. Now, I've got a really interesting chart. Remember, Shane Smolian will be our guest tomorrow, folks, and then on Thursday we're going to have Norm Winsky. On Friday we're going to have James O'Brien from the Wyckoff. He's studied the Wyckoff stuff. But take a look here, folks, that this is a chart that Mr. Shane sent to us, and this is the exponential move of confirmed cases. So this is what's going on right now. You can see 1 week from now we could be looking at around 50,000 cases. We're at 24,000 right now, and he's saying if it keeps moving like this, we would be there at that point. Where would we be 2 weeks, 3 weeks, 4 weeks from now? You have to use your imagination. So we have to, the Tesla's back above 900. You got to love it, and you have to love it. There's somebody short, folks. There's somebody short that stock. That's the key thing to remember. That's what's going on. Somebody is flat out short the stock, and that's what's going on. So it's going to be interesting, as they say in the trade. But we've having a really wild day in the Nasdaq. We went from 92.70 down to 92.29. We're back to 92.60. So there's a lot of buying and selling in this puppy today. So it's going to be an interesting day before it's all over. We had a nice $1.50 rally in crude oil. We've now given back $1 of it, and that's still a bear market. We've should have some pretty good support coming in here in the crude oil just about right about now, I believe. This is where you should some support here at the 50.70 level. That's down almost. It has been down $1 a barrel, and the harmonic number on that is 88 cents. So it's really close to where it should be. So pay attention to that, and I think you'll be able to see where we are. Anyway, let's move on to the next one that we want to take a look at it. Getting back to the hogs there, folks, hogs is a good market to trade. There, a lot of the hedge funds do that. So the thing that you have to do now is you've got to wait for these hogs to give me a really good place to worry about. This is a nice quote about Wyckoff. It says, Wyckoff became wealthier as he became altruistic about the public Wall Street experience. He turned his attention to passing to education and teaching and publishing exposés about bucket shops and how to avoid them, and they were running the Saturday Evening Post in 1922. All those guys came into that era when charts really started to be coming into it. See, yes, Maria's just telling us that the Nasdaq has moved 200 Nasdaq points since 6 p.m. last night, and 20 points since the opening. So that's having some really big moves over here also. So we'll be keeping a close eye on these today and see where the markets move from this level. But we certainly, the old Chinese curse, we are certainly living in interesting times. If you have any questions, it's 877-927-6648, and we'll be talking a little bit more about one of the other currencies that someone's asked us about. That is this British pound. We came down, believe it or not, folks, we had a 300 pip move down in the British pound. Last night we went from just about 133 all the way down to 129. It was about 300 pips. We went down and took out the previous low by just a hair at 129.40, right at that key support level, and immediately turned around and rallied back up 150 pips. So these currencies are really starting to move. Even the euro is jumping around quite a bit. So we're getting great volatility, which we said this would be a tremendous year for volatility. However, I didn't think it would be as much as it is today, but we'll see. But we're seeing some good volatility, and that's the real interesting part that we want to be watching here as we look at some of these things through the thing. Let's just take a look where we were here, just to give you an idea. Here's where we were, folks, on the Nasdaq as of Friday. We were trading at 92.13. We went up today and we hit 92.80, I believe. And that, and all that's been done, folks, in the last 6 or 7 hours. So there's a lot of either there's a lot of illiquidity in the market, or somebody is really pressing it, to make it go a great deal higher. All righty. Any other questions that we have? Oh, one other question. Someone asked about that thing that I posted about the Elliott wave the other day. That was about the number of years the market had topped with the number of 9, and you'll see 1939, 59, 79, 99, and 2019. And then, of course, it went. The top was actually January, if it was the top, January 25th. Remember now, Tesla is not the market. It's back to 907 now. Shut the front door and raise the rent. You got to love it. Oh, boy, that's really good. Oh, boy, that's good. 9:15. Unbelievable. Shut the front door and raise the rent. This keeps rallying and rallying and rallying, and everybody is just as happy as a pig could be. And here we are, folks. We're getting down to our 1561 in the gold. I think the number is 1561 exactly, and we have hit 1561.20. Whether that's going to hold it or not, I don't know, but it's going to be fun to watch, that's for sure. We've just taken out the 61% retracement in the S&P at was 3289.50. We're now trading at 3291.50, and we've had a 100-point swing in the Nasdaq in just the last 15 minutes. 80-point swing, 40 down, 40 up, and still going. So we're going to have some fun here today. When it's all over, we'll have to wait and see what happens. It's going to be very interesting to see what's going on here. Okay. Oh, my goodness. We're almost up to the break time. Someone's asked how Tom Hogarth has been doing today. He's done very well. He caught some of the move up last night, and he actually overslept a little bit, so he didn't do anything the first part of the morning this morning, but he had a very good day yesterday to watch it. But watch this gold here down here, folks, this 1560 level. If we go below 1555, that's going to be really, really negative, because that means it's going to be breaking through that 61% retracement on the long-term chart, and that would be very interesting. This next half hour to hour in the gold is going to be, very, 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 very important, I would think. So that's part of the things that we're keeping a close eye. We just popped up to 92.75, 92.71 in the Nasdaq. So we've had a 50-point move up. Wow, this is 100 points up, 100 points down. You got to love it, boys and girls. Woo, there's lots of fun in River City. Okay, we just made the number in the gold, 1560. There it is, right there, 1560.20, and we're going to see if that number is going to mean very much at all, but we'll have to wait and see. But that's what we're paying attention to this morning. Holy moly, guacamole. We're moving and shaking and making the bacon. Look at this. We got the Nasdaq up about 157 at 92. 92.72, and we were just at, believe it or not, we were at 90.25 15 minutes ago, folks. That's how active these markets are. So that's what you'd like to see as you watch these things unfold for the day. Okay, that's about it. We got the break coming, and then we'll wrap it up and see where things are and where we'll be going and go from that level. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks. I know Tesla's going to be in the news, but and I hope none of you folks are being hurt by it, or if you're being helped by it, I think that's great, but it's a little too volatile for most people. Raise your hand. Yes, I'm one of those. I wouldn't touch that stock. Well, if you're going to touch it, go down to a 15-minute chart and try to find something that, give you a place where you don't have to risk more than $10. I mean, it's swinging $70, $80 at a time, so you certainly don't want to risk more than $10 if you wanted to trade it, and I certainly I certainly wouldn't recommend doing that. But this is very, very unusual, these blow-off type moves. So it means something, especially in the face of some of the most negative news that you could possibly have when you've got the second largest economy in the world shutting down at least until April 1st, and Hong Kong doing pretty much the same thing, and yet the market's ignoring all of this. This is natural, folks. We've seen this happen. I've given you several examples through the times that we talked here earlier this morning, and there's probably a lot more if you read Livermore's book, but these things happen, and when they do, when they're over, when they're over, you be careful. That's all we can say, but who knows when that'll happen. But there's definitely emotionalism with Tesla because it's in the news, much like what Apple is all the time. So, but that is a parabolic move. Parabolic moves always end badly. If someone can show me a parabolic move that didn't end badly, I'd certainly like to see it. And actually, if you look at Bitcoin, if you stop and think of it was $1 a share and went 19,000, that's a parabolic move that didn't end badly. That's really what you're looking at here. So pay attention. Tomorrow we'll have Shane Smolian on as our guest. He's going to do probably most of the show because he's got such great information, and we want to see what he's doing and what he's talking about. In fact, I want to thank him for that chart on the exponential increase in coronaviruses and stuff. So that'll be fun. Thursday we'll have Norm Winsky. Friday, Jim O'Brien, the Wyckoff guy, and that's what we're watching. So live every day in an attitude of gratitude, folks. And may God bless. And we'll see you on the flip side tomorrow. And do something nice for somebody that has a lot less than us. And that's a whole lot of people, folks.